Hello, this is Corner Invest. Today I'll be ranking all these different stocks over here based on their business quality, and I will also be talking about the characteristics of some of your high quality business. So let's talk about the characteristics first. So for your characteristics of high quality businesses, you want companies that can survive through any sort of economic downturn. So for example, let's say you have S&P Global and Moody's in 2008, they were sued. They had their credit ratings dropping by 50% or so, and yet they still survived through that. So that's one of the very notable examples. And then you have Microsoft as well. In 2020, despite the COVID outbreak, and in 2022, despite the market crash, Microsoft still grew revenue in those 2 years. So those are extremely durable business that can survive through any economic downturn. That's what you want. Next one is you want companies that have high barriers to entry, minimal competition, IP, high switching costs, and the most important one of them all is pricing power. So you want companies that have extreme high demand, and even though they increase their prices, they will still be able to hold the demand. So for example, let's say you have FICO. FICO have 100x their prices since 2017, and yet they still are able to hold a high demand for their credit scores. Next one, you want companies with strong revenue growth, earnings, free cash flow growth. This one is basically a non-negotiable thing that you must have for all your different companies. Next one, you want companies that have management with strong capital allocation skills through your dividends and your buybacks. So your dividends and your buybacks are normally the ways for you to give back to shareholders without making any mistakes. If you go and do acquisitions, there's a risk that the acquisition could go south. So for example, Adobe over here, they tried taking over Figma, but the acquisition failed, and then they had to pay $1 billion, which could have been used for buybacks instead. So next one, you want companies that are normally found in a monopoly or a duopoly. So for example, let's say you have Visa, MasterCard, then a duopoly, and ASML, which is in a monopoly. So when you're in a monopoly, you can control prices. You can just execute all your different pricing power, all your different, and raise prices, and people still need to buy it because the only way for them to get hold of that thing is to buy from you. Next one. And the most important one is you want company with extreme predictability. So you need to make sure that you don't sacrifice valuation for predictability. That's what I've been telling myself almost every single day now after so long. Yeah. Anyways, so let's go to this tier list over here. Let's talk about the first company, which is Hims and Hers. So for me, Hims and Hers is a company with a weak moat. So why is Hims and Hers in this weak moat category? It's simple. They just started out their business not too long ago. They've been experiencing extremely high organic revenue growth. But the problem with this business is anyone can just come in and take their lunch. So for example, you have Amazon launching their own telehealth business as well. And then for Hims and Hers, a large portion, about 15 to 20% of the business is through selling compounded drugs. So for example, you have your GLP-1. Your GLP-1 compounded version is from your Wegovy and Ozempic. So when they're taking off the shortage list, then Hims and Hers will suffer basically a drop in revenue because they won't be able to sell all these compounded versions anymore, which is what happened about a month ago. And that's why Hims and Hers dropped around 50% from all-time highs already. So for me, Hims and Hers, it's a company that has a weak moat right now. Maybe it could turn out into something and could continue growing and growing and growing in terms of its subscriber numbers. I think the business model is decent because it's a subscription-based business. But for me, Hims and Hers is still relatively new, so it's a company in a weak moat category right now. Next one is MSCI. So MSCI for me is a company that has an extremely wide moat. So why is it a company that has an extremely wide moat? Because it is sort of like the king of your international indices already. So for MSCI over here, in terms of the international indexes, there is no competition to it. The only competition that it has is the US in terms of your S&P 500, and then your London Stock Exchange that has the Russell 2000. So for me, I think MSCI is a company that has a wide moat. Maybe it could be around the non-compete area as well. So yeah, for me, MSCI is a quality business that you can definitely own today. Next one is Google. Google is it's a holding for me that I've been holding for a while right now, and I have quite a decent chunk in Google right now. But for me, Google is a company that is not non-compete. It is a company with a wide moat. So why do I say Google is a company with a wide moat, not a strong moat, not a non-compete? So for me, it's simple. Google has different portions of their business that is ongoing right now. You have your Google Search, you have your Google YouTube, Google Cloud. Google Cloud will stay 10 years from now, for sure. Google YouTube will definitely stay 10 years from now. Google Search could be declining 10 years from now, but I believe it will still stay as well. So it's simple as that. You have other portions of your business as well. You have your Waymo, your automotive vehicles, and then you have your other portions like your subscription, your Google Google services, your Fitbit, and all those different minor stuff as well. So I think Google is a quality business, but it is not a non-compete business. It is not extremely high quality, and that's why for me it is in the white moat category. Next one is Tesla. So for me, Tesla, I used to love this company. Back in the day, I was investing in it. I was playing around with Tesla stock. I was gambling. I was putting in a few $1,000s here and there, buying Tesla when I didn't know anything. But for me, I think Tesla right now is a company with a strong moat. So why do I say Tesla is a company with a strong moat? Because it is now still an automotive company. Until they transition into their robotaxi fleet and the robotaxi, basically the story, I think Tesla right now is still a car company. They still have most of their revenue coming from selling of cars. And yeah, it is a company with a lot of stories. It's a company with the CEO, the greatest entrepreneur in our century over here. But for me, I think Tesla is a company with a strong moat because they still derive a lot of their revenues from selling of cars. If you compare to all your different other car companies like your Ford, your GM, and all that, I think Tesla is there's not much difference between buying a Tesla versus buying a BYD other than the Tesla brand itself. And for me, I don't think the Tesla brand is strong enough for you to put it under the white mode category unless they can create a robo-taxi fleet. They can create your Optimus robots and all that and rent it out and basically make it a royalty business. And so I think Tesla, it is a strong mode company, not a white mode, not a non-compete, not a weak mode as well. So it is right there in the middle. Next one is Coca-Cola. Coca-Cola is simple, it's a non-compete. So why is Coke a non-compete company? It's simple. I go to the store every day. The first thing that I see is Coke, and the last thing that I will take is Coke because there's no other alternative to it. Pepsi doesn't taste as nice, and Pepsi is always the second choice. It's always Coke that's the first choice, and if there's Coke, I'll take the Coke. And I'm sure that is what is happening to everyone else around me as well. So I think Coke, it's a legacy business, and there's no one displacing it. It is a business that is basically capital light right now. So they just franchise they basically just sell the Coke name to all your different bottlers and then get them to go and sell all your different Coke. So they're just licensing out the Coke name. And I think it is an incredible business model. Of course, the growth isn't quite there anymore, but it is a non-compete business because there's no one else that can displace Coke. Next one is Uber. Uber is a company with a weak mode. So why is Uber a company with a weak mode? Because you have other alternatives as well. You have your Grab, you have Gojek, you have all your different other, you have Meituan, for example, in China, and then you have all your other different alternatives as well, like your Waymo, your Tesla robo-taxis in the future as well. And so if we transition into AV, I think Uber will be hit quite heavily unless they could sort of like transition into an AV company as well. Why? Because Uber, they derive a lot of their revenue and income from the drivers. And if there is no more driver and if the price of all your AVs drop to a level that is extremely low, I don't think the margin is there and it's enough for Uber to take advantage of. So for me, I think Uber, it's a company with a weak moat. There's a company that is quite highly priced right now. If you go and look into their balance sheet and their income statement, if you look deep into it, it's a company that is currently trading at around a 50 times earnings, a 50 times real price to free cash flow. Because if you look at Uber, this is how they put out their free cash flow. They include the insurance money that they get from basically their insurance business as well, and they put it under free cash flow. So if you were to take out that portion as well as stock-based comp, currently Uber is around a 40 to 50 times price to free cash flow, which I think is expensive for a company that is growing around 20% and is facing some sort of disruption risk. I think Uber is a company with a weak moat today. Next one is AMD. AMD is a company with a weak moat. So AMD just simply can't compete with NVIDIA. NVIDIA is a company that is possibly in the strong moat or white moat category, and AMD is a company with a weak moat. Simple as that. Next one is NVIDIA. So if AMD is a company with a weak moat, then NVIDIA is a company with a strong moat because the problem with NVIDIA is they have no touch with consumers. So you have all your different $3 trillion companies. You have your Apple, Microsoft, you have Apple, Microsoft, and NVIDIA. And the only company that has no touch with consumers is NVIDIA. I don't think you can sustain a $3 trillion valuation without having any sort of touch with consumers because it is not very scalable. Once the big AI companies, your big AI hyperscalers, they stop spending capex, then NVIDIA's earnings could be hit very hard as well. And NVIDIA has been doing something called seller financing. I think so. So basically what they do is they lend their buyers money to buy their products. And so it's sort of bad accounting as well, because if those companies go bust, then NVIDIA's earnings will definitely take a hit as well. Next one is Adobe. So Adobe is a company that I think has a strong moat. It doesn't have a weak moat. It is still entrenched in every single corporate office. But the problem with Adobe is they face a lot of competition. So you have this software over here, which I'm using, Canva, and then you have your other alternatives as well. And then you have all your different AI, generative AI as well, which could come out with all your different Adobe-like videos. So for me, I think Adobe, it is a company that is trading at a decent valuation right now, around 24 times, 22 times real price to free cash flow, and then a 24 times price to earnings. But for me, I think Adobe is a company with a strong moat. It's not a company with a weak moat, and it is a decent consideration now for me. But the competition part is one that I cannot get around it. Next one is S&P Global. S&P Global is simply a company that is a non-compete. Why? Because all your regulation, all your different credit scores and all that, they are built around S&P Global's manual. And so for a company to want to go and get debt, the only way for them to get the debt at a lower interest rate is for them to go through Moody's or S&P Global. And most of the times they will try and get it from both so that they can sell the debt better. And for S&P Global over here, it's an extremely monopolistic business. It is in a duopoly with Moody's, and I think there's no one displacing it because they have been the standard for the past 50, 60 years already. And unless the regulation comes up, unless the US government comes up with a new manual for how to rate bonds, which I don't think they will, because in a financial crisis, you want to be able to blame all these raters. You don't want the US government to be blamed. And so I don't think the US government will go and create a manual for all these ratings. They will want to push it to like your companies like S&P Global so that in case the ratings go bad, at least they have someone to blame instead of themselves. So I think S&P Global over here, the company that is incredible. You have Warren Buffett owning Moody's as well. So I think S&P Global is a non-compete business. It is an extremely high quality business. Next one is Microsoft. Microsoft for me is a non-compete as well. Microsoft, you have your Microsoft 365, you have your Windows. Azure is the portion that is a bit oligopolistic. But for me, I think the Microsoft 365 is extremely entrenched in every single corporate office already. And then you have your Windows as well. The only alternative to Windows is Apple iMac. And so I think for me, Microsoft is a non-compete. It's a company that has been growing for the past 50 years already, and they will continue innovating and growing and growing and growing. So for me, it's simple. Microsoft is a non-compete as well. Next one is Amazon. So Amazon for me is a company that has a white moat, not a non-compete. Why? Because Amazon is susceptible to economic downturns. It could crash maybe 50% in terms of its earnings in an economic downturn environment, which we saw back in 2022. So if you're to look at the checklist over here, which I was talking about earlier, I want companies that can survive through anything. And unfortunately for Amazon in 2022, their earnings went negative, which is what I don't like to see. And that's why Amazon is in a white moat category. Next one is Meta. So Meta, similar to Google, is in a white moat category as well. It is a company that is semi-cyclical because it is dependent on the economic environment. And so when people feel better, people earn more money, they're going to spend more on ads and so on. But once the economy goes bust, then you could see a decline in earnings, especially for Meta, which is what I don't like to see. And there are other alternatives to Meta as well. You have your Google, you have Amazon, and then you have companies like Adobe, which is coming out of advertising as well, and Salesforce. So for me, I don't think Meta is unbreakable in terms of their moat, but it is a very high quality business, not a non-compete like all the three ones up there, but for me, it is quite decent already. Next one is Robinhood. So Robinhood is a company with a weak moat. Why is it a weak moat? Because this company can't survive through a recession. This company can't survive through an economic downturn. There are multiple different alternatives to Robinhood. And Robinhood is basically leveraging on trader activity, speculation, Bitcoin and all that, which is what I don't like to see. I prefer IBKR. IBKR is a company that has been growing its user base, growing its basically the equities of all the different users, and then it is the only company that is able to access all your different international markets, which is what I like to see for my broker as well. Next one is Apple. I think Apple is a company that is non-compete as well for now. Maybe in 10 years down, if some other company comes out with an iPhone, then maybe there could be some form of competition over there. But I don't see anyone displacing Apple's iPhone. Apple can just create this iPhone every single year and the revenue will stay flat and everyone will still keep buying their iPhones every single year. So for me, Apple is simple. Apple is a non-compete because there is no other alternative right now. Although Apple is not innovating, although Apple is not growing organically anymore, it is a company that is still incredibly monopolistic because there's no competition. Next one is Nike. Nike is a company with a strong moat. So for me, Nike, the problem with Nike is this. They have a lot of competition in the space. So you have your companies like your sportswear, your athletic wear, like your Lululemon, your Alo, and then you have other companies like Adidas, Anta, Li Ling, and then you have all your different Under Armour and so on, and Hoka as well, which is the company under the ticker symbol DEC. So for me, Nike is a company that has incredible brand value. It is a company that has leveraged its brand very well over the past few years. You have your Nike brand and then your Jordan brand as well. And then they are leveraging all your different athletes, all your different basketball stars and all that. But for me, I think it is quite transparent. It is quite open that Nike, even a company like Nike with a strong brand value, is susceptible to susceptible to downturns in terms of their earnings. So, for example, like this year, Nike's revenue is projected to drop double digits. That is incredibly crazy for a company with such strong brand value like Nike. And then their earnings are dropping around 15 to 20% as well. So I think Nike, it is a company with a strong moat, not a company with a weak moat, because they have competition in the space. It is not a monopoly anymore. It used to be a monopoly between Adidas and Nike, but they were too intensive in terms of their competition with each other to try and take over each other's market share. And so I think Nike is a company with a strong moat. Next one, ASML. ASML is a non-compete, simple as that. They are the only company in this world that is able to produce your EUV machines. So there's no competition to it for now until maybe China comes out with an alternative. So ASML, non-compete, simple as that. Last two companies are extremely monopolistic, extremely high quality. Visa and MasterCard. Visa and MasterCard they're just payment processors. They don't have any credit debt. They have nothing. Basically, people use their cards, they pay using their cards, and then they just take a very, very small fee over there. They don't lend out money, so they don't have credit risk. And all they do is they just grow with the economy plus a bit more. So I think MasterCard and Visa, they are extremely high quality businesses, and that's why you never see them on a very cheap valuation. The lowest valuation that Visa got to was around a 26 times earnings. MasterCard was around a 28 or 29 times earnings. So 28 and 29 times earnings are still relatively high. But I think for Visa and MasterCard, they are extremely high quality businesses. They're basically toll gates collectors, and so they are extremely high quality as well. And so that's why they are in this non-compete category as well. So back to this one over here. When you're buying stocks, you want high quality businesses, and that's what I've been doing. I have been telling myself not to sacrifice valuation for business quality. And so if you want to buy businesses, buy the ones up here, don't buy the ones down here. And so I hope you guys have found this one useful. Leave some comments below if you have any other suggestions.